What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, I want to talk to you about specifically the first red day, signal day, and setup. All right. But you can also obviously apply this logic to your first green day, signal days, and setups. All right. Now, before we get right into the video, I want to share this little anecdote with you that I heard, in reference to something that didn't have anything to do with trading, but in my mind, I made the correlation. All right. And this should help you to remember how to look for your first red day and first green day signal days properly. All right. So I can't remember who said this. It was some famous person throughout history. Okay. They said that when a shipbuilder is looking for a new tree to build a mast for their ship. Okay. The mast is that big, tall pole right in the middle of the ship, where when you think of an old pirate ship or something, right, they put the crow's nest right up there on the top of the mast. It's that tallest pole right in the middle, right? When the shipbuilder is looking for a tree to cut down to build a new mast for their ship, they do not look for a tree that has grown in a valley. Instead, they find a tree that's grown on top of a mountain, and that's where they get it from, because a tree that's grown in a valley has not been subjected to the same type of turbulence that a tree that's growing on top of a mountain is subjected to, okay? A tree that's growing on top of a mountain has been buffeted by the wind for years and years and years, so you know that it is strong and it is sturdy enough to withstand the types of winds that a mast of a ship will experience while sailing, okay? Now, what I'm trying to say is that you do not want to be looking for your first red day setups or your first green day setups when we're on the inside, okay? You want to be looking for these signal days and setups at the extremes, whether that is the high or low of the week or the high and low of the month, all right? But you never want to be in the middle. You want to be at the extremes. So your first red day signal days will be the most consistent and the most profitable when you're seeing them at the high of the month or after we break the high of the previous month. And your first green day signal days will be the most consistent and profitable and successful when you're at the low of the month or when we break out of the low of the previous month. Okay. Now, I've prepared this little slide for you here to just explain the basics of this, and then we'll look at some chart examples. All right. Now, you see this here. I've traced this out for you, right? We have the previous month's high that is notated by this blue line. Okay. And imagine these are daily candles. All right. So we've broken out of the previous month's high and we get a first red day signal day. All right. That's where you want to find your first red day signals. Now, it's also important to note that just because we've broken out of the previous monthly high and we have a first red day, that does not mean that we automatically sell the market the next day. All right. For me, I have specific things that I'm looking for that tell me this is the ideal scenario to short this market for a first red day follow through trade. All right. Typically, we're not trading the first red day itself. Right? That's a signal day, which is a day that alerts us to a potential trade the following day. And the following day, I want to point something out to you, right? Because obviously, okay, if this is a daily candle, we have an upper wick, which is the high of the day. We have a lower wick, which is the low of the day. We have the upper body of this candle, which is the opening price of the day, and the lower body of this candle, which is the closing price of the day. And the same is true for the next day. And you can see we open where the close of the previous day is, and we have this wick. Now, what that wick tells us, okay, it tells us more than just what the high of the day is, okay? What it shows us is that there was a portion of price action that took place in this day that came back above the previous day's closing price, stretching back into the previous day's high and low range before dumping down and giving us that lower close. So if we can take our trades ideally above the previous day's closing price, we're doing the right thing here. Okay. That's the ideal scenario for me. That's what I'm looking for my first red day follow through trades. All right. This wick is showing us where our peak formation high should be locked in place. Okay. Somewhere above the previous day's closing price. Okay. And as you know, we have three major sessions every day. We have the Tokyo session, the London session, and the New York session. So this could happen in any one of these sessions. And I've drawn this out for you, okay? Here's a Tokyo session example, right? Here's our first red day. We have our closing price drawn on the chart in this blue line, and you can see the market pumps up above the closing price in the Tokyo session and then begins to dump down. We have three peaks here that lock in the high of the day before the market starts to dump, okay? And then over here, here's a London example where we have a market that's trading up above the previous day's closing price, locks in the high of the day with three peaks, and then starts to dump, okay? And then over here, we have a New York example where we have our first red day, the market pumps back up into that first red day's range, three peaks going into the New York session, and then begins to dump, all right? Now, anything can happen with the market, okay? We do not have to trade back above the previous day's closing price. This thing could start to dump as soon as the new day opens and never come back up there, all right? That could happen. But that's not what I'm looking for. What I'm telling you is that this is the ideal scenario for me. These are the easiest first red day scenarios for me personally to recognize, all right? So now let's go ahead and look at some chart examples. Here we're looking at gold, all right? And I have drawn the high of the previous month and the low of the previous month. And you can see this is obviously not the high of the month, okay, because it goes higher right here. But this is the most recent high and low range of the previous month. So I would want to see my first red day signals somewhere up here. I would want to see my first green day signals somewhere down here, all right? Now, we also do not have to break out of the previous month's high, right? For example, if you look right here, we have three higher closes right here. We have these three green days, okay? That is three higher closes. This is a brand new month right here. So at that third higher close, that's the highest closing price of the month. We're at the current month's high of the month level, all right? And then we get a first red day signal day potentially right there, and then 3 days of lower close or 2 days of lower closes after that, right? So you could be looking for these signal days like that at the high of the current month, as well as when we break out of the high of the previous month. And then here you can see we have come down. We're trading back into the low of the previous month levels. We don't break out of it, but we're down there. We're near there. And then we have our first green day signal day, followed by 3 days of higher closes, right? And if we zoom in here, we have a Tokyo session opportunity here on the 21st, okay? Here's some red days. Here's our first green day. The next day basically chops sideways, but it does go higher. We put in this high right here where that triangle is. That would act as my target for this dump and pump type of trade. Here's our three peaks. We're below the previous day's closing price, right? And then we start to break out and go higher, all right? Maybe you enter somewhere in here off this pullback and hold that thing, okay? And also you can see we have a peak formation high, peak formation low, and then we have higher highs here for the dump, coil, and pump type of scenario, all right? So you can see this is yet another variation. This is a variation of a first green day where we may even have a short trade the next day, but that follow-through trade does come. It just takes, a day and a half to eventuate in the Tokyo session on that day after, right? So there's a lot of different variations. You have to develop your eye, figure out what works best for you, what's the easiest for you to recognize, all right? Here we're looking at the DJ30. You can see here I have this month's low marked off the most recent low, the most recent high, which is the high of the previous month right here, marked off, stretched across. We break out of the high of the previous month, okay? And we get a nice first red day signal that breaks the high and closes lower there, okay? And if we zoom in and look at this market, there's that first red day. Okay, I actually took this trade myself. We had the 3 higher closes, okay, into the highest closing price of the month, which is a reversal setup. So I was looking for that trade. We had this peak formation low, which was the target for a pump and dump type of trade. But even if you did not take that trade, that's your first red day signal day. And the next day, we get a nice London session opportunity. Here's our 3 peaks that form throughout Tokyo going into London, okay? And then this market breaks down. We lock in the high of the day. We start to break down. We break through all these levels going into that London session. You're just getting in that market, right? And holding on. And remember, if you're looking for a first red day signal, you're getting that at the high of the previous month. After we've broken out of the high of the previous month, we have higher time frame traders triggered into this market. This is a potential ACB, hold until close type of opportunity. And you even have a nice low hanging fruit trade going into the New York session later on that day after the London session. Okay. Here we have the British pound. And here I'm just showing you multiple examples here, but here's a low of the month, high of the month. And then when we get here, we get our first red day signal day, followed by 4 or 3 more days of lower closes. And then this current month, this week that we're in right now, was ideal for this type of setup, okay? We break out of the previous month's high, okay? Get a first red day signal, and then 3 days of lower closes. And when we look at these opportunities in the next slide, you're going to see exactly what I'm talking about, how we pump up above the previous day's closing price, 3 peaks, go lower, okay? Look at these days. Such beautiful movement from this market, okay? You could take any one of these trades and make a lot of money, okay? You can see here's our first red day signal. We got 3 pushes back into and above that closing price, okay? We're locking in the high of the day here in London and then dropping down, okay? The next day, we go a little bit lower. We have this as our initial target. This is our secondary target. Pumping up above the previous day's closing price, 3 peaks that lock in the high of the day and start to dump, okay? The next day, pumping up above closing price, 3 peaks, locking in the high of the current day and dumping, all right? This is the ideal scenario for me. These are easy trend continuation trades as we continue to put in lower lows every day, okay? This is the ideal market movement for what I'm talking about. Pumping up above the previous day's closing price, locking in the high of the day, dumping, all right? That's just a repeat slide. And here we have natural gas, okay? Here we have the high of the previous month and the month before that. We're back up in there after 3 higher closes at the high of the current month here, and then a first red day signal day. Nice wick on top where we take out the previous day's high and close lower, followed by 3 days of lower closes, all right? And look at this trade. Here's our first red day signal day. And look at this massive sell-off, okay? 3 peaks here in London, nice head and shoulders, okay? 2 more peaks that go right back into that closing price and dump in the New York session for a massive parabolic opportunity, all right? So this is exactly how you should be looking for your first red day signal days. You do not want to be looking for first red days when we're near the low of the previous month, okay? That doesn't make any sense. We want to short the market when we're at near the high of the month. And with this first red day, right? Once we go up here, we're at the high of the current month. We're breaking these levels over here. We potentially now have higher time frame traders triggered into this market and driving this move, which is why we have that parabolic type of action, all right? Again, here, when we break the high of the previous month, right? People shorted this market. Higher time frame traders have shorted this market at the high of the previous month. Their stop losses are up here. We also have breakout traders who are saying to themselves, when this market breaks this level, I'm going to buy it. So they have pending buy orders here. So when we hit that monthly level, right, we are triggering higher time frame traders into the market. They're buying this market. And then all of a sudden, they're taken underwater. Okay. Stop losses are being hit, accounts are being blown, and you're making a lot of money. All right. So, again, right here, the high of the previous month, we trigger all these orders up here, and then bam, drop straight from the high of the month to the low of the month. That is a market being driven by higher time frame traders. That is a key ingredient. Triggering higher time frame traders, that is a key ingredient for an ACB setup, right? An ain't coming back setup. Once we have higher time frame traders triggered into this market, trapped on the wrong side of the market, that's what gives you that opportunity, that all-in unidirectional parabolic move. All right. So I hope that this video makes sense out of some things for you. I know I'm kind of all over the place with my explanation, but I do appreciate you guys being here. I hope this clears up a little bit of confusion. If you have questions, drop them in the comments. If you have suggestions on how I can improve these videos in the future, also drop those in the comment section. Feel free to join the free Discord community where I'm as active as I possibly can be. You can ask the guys in there. I'm there to answer your questions. We do free phone calls on Sundays and Mondays. I'll never ask you for money. I'll never ask you for favors. Nobody else is going to ask you for money or favors either, or else they will be kicked from this small community. All right. I'm trying to keep it clean and supportive there. And I appreciate every single one of y'all for being there, for helping each other out. It's a beautiful thing that we have going on. I can't wait to see you there, man. But until next time, I hope you continue to free your mind.